The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another gorgeous day here at the headquarters of Technical Trading and Investing, TFNN.com. It is a gorgeous May 20th out here for traders, and getting a little bit of sugar, just a little bit of water to wet your beak. If you are a trader, we went right down to support at 1868, which is where everybody's has been always buying for the last month or so. It doesn't look like they can avoid it for more than about 5 minutes. So they're back in here. We'll see whether this holds or not. 1.8 billion shares as we start the day at 1870. Actually start the show, not the day. At 1871 on the S&P cash. Of course, we went down to that 1868, which has been acting as support. And it's been doing a Academy Award job of acting, because it's pretty much done it. Now, we had a couple of Fed presidents come out, and I'm going to say that whatever they said, although I did read it and quickly forgot it, basically came out, and at both points we saw major slippages in the market. They were hawkish comments, hawkish, like a hawk, like the bird. I can't make a bird hawkish sound, but I would if I could. I digress again. I'm going to win another award, I know it, this year. But what do we have? A market that is in this lower trading range. What we don't want to see is this slow meltdown into the long weekend on light volume. And the reason is because we'd probably then break out. I guess I don't say I don't want it, because I don't have a dog in the hunt right now. I am 100% cash. I want to see what happens over the next few days. But if we continue on a light volume move down for the next 3 days, going into the long weekend, then I would say we're probably going to run and break through the previous highs. If we could go up to those previous highs on no volume over the next 3 days, I would say that there's a pretty good chance that we could put in a top. Either way, I'm still looking for some kind of spike. We've got a lot of shorts that have piled into this market. Normally, the markets don't break when you get that many shorts. And you need to basically, the horse needs to buck a few of them off before you break the camel's back. I'm going to mix some metaphors here with horses and camels. And, of course, I'm going to put some new awards on the shelf this year for mixed metaphor, and the most mixed and tortured metaphor. I'm probably going to win the award for that, I would imagine. Anyway, we've got a market kind of moving. Certainly not a great deal of volume yet, a little bit better than we thought. Just a few things. We had some rather poor earnings from retail vendors, mostly clothing vendors this morning. And we're going to probably see a couple more earnings that will probably rock the market a little bit. But probably HP is, I think after the close tomorrow is about it. We also have a Fed announcement and news starting at 2 o'clock tomorrow, or around 2 o'clock, I think, which is I think it's the beige book out from the Fed. So we'll see those documents, and they'll probably move the market, and then that's it. That will probably be the height of trading and volume for the next hour after those come out, and then look for very, very light volume into Friday's close. And as I said before, what we won't see, or what I'd like to see, is a close somewhere up at these highs that the short could not stand, and then plant my flag when we come back next Tuesday. I could be wrong on that, and we could be having lower lows with a lighter volume over the next 4 or 5 days, and then I'd have to think about actually going long and seeing that this could be a breakout with higher volume, but no evidence of that so far. And we can take a look at it. A lot of the stocks already been hit fairly badly, but well, we'll look at it. So other things going on today, of course, I'd like to start off the show with a bit of history. In 1999, eToys Incorporated, a startup internet retailer, goes public on the NASDAQ. Initially expected to be priced at $10 to $12. Stock is underwritten at $20, quadruples before the opening bell can even ring. The first trade is a standing $83.09. You people don't remember, do you? When everything was in a 16th or an eighth, 2/16. The shares closed that day at $76.09, a one-day return of just 282%. Money was just falling from trees those days. Just 19 months later, 2001, the company announces it will file for bankruptcy as it made no money, had no business plan, and basically those guys ran off with a ton of cash. Now, one of the reasons I keep bringing these up on this day in 1999, May 20th, is just how insane markets can become. But at the same time, you want to look at companies and IPOs that have no business plan, that don't make money, and ones that do. And I segregate them into two segments. You have an IPO that has basically was at least filed for last night. We're going to get into that in the news today. But it's rather small, and it's puzzling why they did it. I can speculate, and we will in a few minutes. But there is a great difference between these companies that make no money and some that make some money, and some that have basically business plans that don't make a lot of sense. But we will talk about that in a moment. And that is GoPro. GoPro makes these small little armored cameras. The cameras record their video directly to memory, and because they're not bouncing around, videotape doesn't have to go through the head. I actually made a video. I think I was probably 1980, 1981 in film school, and what I did was take a soccer ball and mount the camera in the center of the soccer ball, cut a hole out the side of it so the lens could see out the side of it, and I threw it off the Liberty Memorial, if anybody's been to Kansas City, and watched it roll all the way down the hill to the train station. And I put an old 8mm camera in it. Of course, not any video cameras even at that time that you could have done that with. But I found a small, old, junky camera that worked. And that was kind of my introduction to having these cameras that if they bust, big deal. But that's exactly what these things are. They go in harm's way. I put these kind of cameras on my motorcycle when I was racing. Some of the early prototypes of these kind of things. I actually, even before that, was putting small 8mm video cameras on those. But they make these cameras that basically people jump out of airplanes and go skiing with and do all kinds of stuff that should probably get them killed. It is a good business. It is making money. They sold almost 4 million units last year. So it is a company at the very beginning of that side of business. The question is just how big the business would eventually be. But the question I have about when the IPO prospectus came out last night was the size of it. They're only looking to raise about $100 million at the IPO. And that's like nothing. I don't know what it's hard to figure out what they're going to value the company at. But the question would be, why did they do that? And I think the answer is they don't think that there's going to be an IPO market later. They want to get this thing out the door, and then they'll worry about pushing that additional paper out as the company grows over time. So this is the ultimate, I'd say the ultimate sliver deal, except there's one difference. The company actually sells product, and they make money. Now, maybe this is the best that they ever get. Maybe it's not. Maybe they have a lot more growth to go. They certainly, this is the first year of the trajectory for higher sales. It looks like it is in jeopardy. So they may just be wanting to go to the cash store to expand. One of the guys in Shark Tank was on CNBC today, and he was kind of dissing this as a one-trick pony company, thinking that they should sell themselves instantaneously to some other company. And, it's hard for me to see that you can sell a camera, and the big claim to fame is that it's armored and that it'll go underwater. It doesn't seem to me like the most mass market of product, although a lot of people use this. In the metrics, they have 3,000 people a day uploading, using their GoPro Studio product, which is kind of a cloud-based editor that you can use through the web. They have 6,000 daily YouTube uploads from their devices. And like I said, they sold just a little under 4 million shares, 4 million units last year. In the scheme of things, kind of a drop in the bucket. But it's got all the sex appeal of a big IPO, that they're not going to come out and really drive this thing, but try to get it out the door as quick as possible. Probably tells us more about the short-term market than anything else. And they want to get this done before it's not doable at all. And the worry about pushing out the paper yet another day, because all those shares will still be there. And they'll be like on a shelf, and they can bring them out and hand them out and put them into the market anytime they need cash. So it'll be interesting. Oh, yeah. David Letterman dropping watermelons off a building. Yeah. Somebody in the dens is bringing this up. But, that was one of my submissions for art school, was the soccer ball thrown off about 100 feet. And it was a little bit of engineering to make sure that the 8mm camera didn't instantly die, and was able to retrieve the film. Actually took me 3 attempts and 3 cameras, but I got it done. But it was kind of avant-garde in 1980, pretty mundane, and probably mediocre for something in 2014. But at the time, I got a lot of people thought it was a very interesting video to see, basically wandering on the street, cars trying to run it over, everything else. Interesting product or project. Anyway, GoPro filing, and they're going to try to get this thing out in the next couple of weeks, which makes me think the market is on its last legs. When we come back, we're going to talk about having it your way. Your way or my way? I don't think it's either one of our ways, but we'll talk about it when we come back. You can certainly give me a call at 877-927-6648, or you can email me at path@tfnn.com, or you can pass a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dig this up because I don't think a lot of people know. Anyway, Burger King is scrapping its 40-year-old have it your way slogan in favor of the more personal your way. Just for those people that didn't live through the 70s.
Hold the pickle, hold the lettuce, special orders don't upset us. All we ask is that you let us serve it your way.
Oh, well, in that case, could I have the other Whopper with extra ketchup?
Sure. We can serve your rolled beef Whopper fresh with everything on topper. Any way you think is proper, have it your way.
And that's it. It's one of those deals where we just have that kind of have it your way mentality, but of course they're going to change it to be your way. I don't know if it makes any difference at all, but I know that the local Burger King, they mowed down with a bulldozer a couple of months ago. It just reopened. But I think that people hated it so much that unless it got mowed down, they were never going back to it again. When you can't be hired at McDonald's, you go to Taco Bell. When you're not Taco Bell material, you go to Burger King. And when you're at Burger King, you don't speak English, apparently. And probably why I'm not a big fan of it. But we'll see. They've opened a new thing, and maybe it's better. I don't like going to it too much, mostly because it's on a horrible location. But it is what it is. What else can you say? But kind of the passing of an era. There was a question in the den that what can I say? That there are going to be problems for McDonald's and Burger King, mostly because of the pending price hikes. I know that both of these companies to how can I say this, hedge, I guess, a lot of their costs. For me, I don't know how long you can actually hedge those levels, but it is a good chance that I think, you're probably going to see lower prices on McDonald's and on Burger King and on Wendy's probably by the end of the summer. But I think the idea that these things instantly reflect higher costs in wheat, corn, and beef, probably not too correct. Almost all these companies, McDonald's and Burger King, all get their beef from Argentina. They do not get corn-fed or wheat-fed or anything-fed beef. Your beef at that McDonald's place comes from Argentina, and it eats grass off the side of a mountain like a goat. So it's hard for me to believe that's going to happen, but the higher price of beef here will make the price of beef, all over the world higher as we have less. Of course, the better quality beef will be taken, but you can have it your way. What else do we have out here? Surface 3 came out. I wasn't able to listen to the, I'm trying to think what I can call it that won't get everybody upset. I don't think anything other than forcible ear, and we'll insert something in there that would make, just whatever would make you mad and disgust you, of disco music being played during the breaks today. But anyway, I was asked what I was listening to. I was actually listening to the rollout of the Surface 3. And the Surface 3 is Microsoft's, I'm going to just say it, it is the replacement for the ultra-portable laptops or the notebooks. The Surface 3 product was shown today. It will be for sale tomorrow. Starts at $799, and it's not going to be cheap. That's an i3, so a pretty powerful device. I would like an i5 version. That's probably going to run me more into the $1,200 range, and you can get these with an i7 and tons of memory all the way up to about $2,000. The displays are, I think, 2600 by 1450, so fairly high-res displays. It's a 12-inch display, so it's a large tablet with a attachable keyboard. So it is a notebook. It is a tablet. It is going to have a full Intel Haswell CPUs in it. So it is going to be one of the most rocketing laptops out there. To a couple of things it does that is very neat, but it is very Apple-like with the a lot of things it does. Plus, they've got a few new things that were kind of interesting during the rollout. Then we're going to get into charts a little bit later. Is it a game changer? I think it's very close. I'm going to go out and look at one tonight. Be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
It certainly is a big bun.
It's a very big bun.
Big fluffy bun.
It's a very big fluffy bun.
Where's the beef?
Some hamburger places give you a lot less beef on a lot of bun.
Where's the beef?
At Wendys, we serve a hamburger we modestly call a single. And Wendys single has more beef than the Whopper or Big Mac. At Wendys, you get more beef and less bun.
Hey, where's the beef? I don't think there's anybody back there.
You want something better. You're Wendys kind of people.
And, yeah, it's interesting, all those commercials back from the 70s and 80s. I think that was the early 80s, I think, if I remember right. But where's the beef? Well, it's in Argentina. And, of course, after this show today, we're going to have Andy Peck, and maybe he'll talk a little bit more about beef. 1976, my engineer says, why he's not playing bad disco music. Anyway, it is, we were talking about the Surface, and a couple of people ask, is it a game changer? And the answer is it could be very close. I'm going to go out and look at one tonight. I spent a lot of time with the Surface 2. Pretty good unit. Some of the new features that they've really gotten very well done here is an interface for the pen and drawing on it and notating it, especially the connection with sharing those documents over its cloud system. There's a bunch of stuff in this that is very interesting. One of the problems that they brought up, and it's happened to me because I tried to buy a tablet to annotate during the show. And instead of just drawing with lines and curves and stuff, standard vector style drawing tools during the show, I got one of those bamboo tablets. It was a couple $100. They talk about, or did talk a lot about in the rollout today, about parallax error. What they have it is that the screen is extremely close to the pin's surface. So it's not like you're kind of drawing and you see it in a fish tank, a half an inch behind the glass. It looked very good. I want to play a little bit with that, but they've really made this a device that works very well for collaboration. I would imagine that big CEOs, a lot of power players, power users, especially those people that want Office and all the features of Office and OneNote ready to go, would probably really like it. But I think we're really talking about getting to the point where these are fairly expensive devices, but are they starting to look at making the Ferraris in the PC world that basically Apple has already made? I think the answer is yes. I think they've got a lot of features that Apple don't, and doesn't have, because Apple is really on the creative side and not so much on the productivity side of the business. This product really looks like it's geared more toward not the creative people, but the creation people. And they may be creating spreadsheets, all that kind of stuff, presentations, probably not making movies and or writing music, which Apple has a lot of tools for. But they've done a very good job of putting together this thing. I'll tell you what, it's got a wonderful display. It is incredibly thin. It's, 1.8 pounds. It has all the features in the world. I like the fact that it's got a lot of USB ports. It's got a docking station. It's got a fan that you never hear running. I mean, all of the things that you would love in a very high-end product. It starts at $799. You're probably going to spend $1,000 with the Surface keyboard. The new keyboard is very cool. They've updated it quite a bunch. And also the ability and the kickstand to hold it up while you're doing something with it has done a lot. But I think we're very close. I'm going to go play with it tonight over at Best Buy, and I'll talk a little bit more about it tomorrow, and then on the Tech Insider with Tom O'Brien on Friday. I think Microsoft's doing just about everything right now. I don't know how long this can last, maybe a couple of years with the upgrade cycle on Windows XP, but a pretty neat device out there, if you have to say it. It is a mad market. We're sitting right at support. Support comes in at 1868 and has, every time we try to bust down, one of the things that you want to look for is a volume here. We're off 16 points on the S&P cash, but we're under 2 billion shares as we go into the bottom half of the hour, certainly deep into the bottom half of the hour. China. What's the deal with Windows 8? China's not using. Well, China never used any of the other ones that they actually got money back to Microsoft on. But Bill Gates said it best. If they're going to pirate something, I hope they pirate our stuff. They're not pirating anything. They're not buying anything. They are just stealing it. And there's nothing new with China doing it. Is Windows 8 a disaster? I don't think so. There's going to be a update coming out probably in September that I think will take care of the final complaints that everybody has. There's been a fairly major update lately to Windows. I'm using it, so it's no big deal to me. I've got 3 or 4 computers here. 2 of them are running Windows 8, and I'm developing some tablet applications for it. But it is, especially the tablet interface on it, is quite good. I just don't have a lot of apps that are Flappy Birds. They need a lot of horsepower, and they need high screen resolution. I think this is probably the Surface 3 is probably the closest thing to something I'd actually try to use charts on. And I like the fact that it natively drives a 4K resolution screen too. So if you take it as a presentation device, into a boardroom somewhere and they've got a 4K screen. I mean, those things are only selling for $650 now. It's not doing that big a deal. But everybody always rains on Microsoft because of Vista. And then, of course, everybody bought Windows 7. So maybe it's Windows 9, and it's not much different than this. Whatever they announce, it'll come out. And I think there are a lot of good features. But in software development, early on, I had a meeting with the head of Electronic Arts very early on. Probably this is about 1985. I think it's 1985, maybe 1986. And I was going to be part of the people marketing a product called Deluxe Paint. It was one of the first paint programs on any PC. And this was on an Amiga computer. And I met the programmer. We talked. Anyway, the Electronic Arts guy came out. His name was Trip Hawkins. Pretty famous guy at Electronic Arts there during the heyday. And he was a big protege of Steve Jobs. And I don't think he got enough credit for what happened over at Apple. But he did tell me the baby duck story that both him and Steve Jobs originally believed in, and that was whatever you use first is what you believe is your mother. It is the baby duck. When it sees the first thing, whether it's a human or a chicken, it thinks that that's mother. And if you learn to use WordPerfect or you learn to use Word, it is very, very tough to change any of the interface and not have somebody irked, because people are very resistant to change. He told me a rather graphic story of trying to go to the bathroom and use a different hand to wipe. He was a very colorful guy. And I said, yes, I kind of understand your paradigm here. If you were right-handed, try doing anything with your left hand. And he said, once you get used to it, it is very tough to change. But that is, I thought it was very interesting too. But those were kind of some of my early days with people bouncing around that were accidental billionaires. Trip Hawkins drove Electronic Arts probably, for the next 10, 15 years. An excellent guy for a CEO. And, of course, much retired these days. But I digress. Anyway, it is a mad markets. And very colorful stories. I wish this is one of these things where we weren't on radio sometimes, so I could get just a little bit farther and deeper into what they actually said. But that's it. Anyway, we wanted to look at a few stocks. The ones I wanted to look at earlier today were earnings. Had a lot of stocks had some real problems this morning. One of them is Dick's Sporting Goods. This one had a very nice Gartley pattern that set up the sell on it. I was looking at it, and I can't remember. It was probably because I was short everything else at the time. I didn't get involved on it. I saw a lot of other stocks that I thought had a lot more potential. This one certainly took a long time to sell off and then fall off. But a beautiful Gartley pattern if you want to look at one. The January 8th was the X point. When you get down to the 8th point, that was the February 5th low. Your B point is your February 10th high. Your C point is February 13th low. And it went right to the edge of what I like to trade and what shows up in Art of the Charts, which is a 90% retracement of the X to A point. And started slowly rolling over on these. Volume did decrease on that X to D leg as it should, and you really didn't blow through. I think maybe this was the reason I didn't take this thing. It had just slightly higher volume when it broke the B point by maybe 300,000 shares. It was very light. Remember, there was some reason I didn't take it. Nice Gartley pattern, got up at the very high, started rolling over. Of course, it fell apart this morning. But pretty much what you're thinking. These retailers had just a horrifically bad couple of months. You would think, especially with these sporting goods stores, springs rolled out, they'd have a little bit better news. Home Depot came out early, or this morning was actually down. They came out and tried to guide up, and that's where the stock popped up this morning. But after the first blush, which is normally the right thought in a market and why I look at stocks right after they reported. Hopefully, especially after the bell was very good. What is the first reaction to when people get the numbers? The old saying is think long, think wrong. And that this popped down lower, probably a better indication than what it did here later in the afternoon. But high volume kind of rotating doji out here, not a lot. If you do want a stock that did well, it's Red Robin Gourmet Burgers. If you've never been one of these, I don't think there are any around here. I've been to a couple, and it is very, very nice burgers and very, very nice cereal malt beverages. So you get your finest beer with your finest hamburger, kind of an in-and-out burger with beer and lots of different beer. So we'll take a look at this. This thing went right back up to the previous high today, went over it by, about 50 cents or so far. Had a fairly light volume in that day, so it's up against resistance. But Red Robin came out with good numbers, good forecast, and looks like some expansion out there. And a big sponsors of Psych, the TV show, which I loved. No longer on the air, unfortunately. But still love that show. Staples. This one, I've been talking about this one for probably a year and a half with Tom O'Brien. We've been saying, this is like one of those kid with a loose tooth that just won't let you pull it. These guys, all of these office companies have huge problems, especially brought on by Amazon and some of the other retailers, bypassing the highest margin products that companies like Staples have. They also sell a lot of computers and have been beat up by Best Buy, dropping their prices. So a lot of things, a lot of hard wins going up against Staples. I think they're going to do a little bit better as Office Depot and some of those other companies finally go broke. And at that point, I'd probably look at Staples for a rebound once they lose a little of the headache of a lot of the other competitors that aren't just doing anything at all. When I go into Staples or the local Staples, they don't have a lot of things. They've got like a big store, and the rest of them, they continue to shrink the actual product in it. I think that just makes it worse. But what can you say? Down on heavy volume. You had that high volume low. Really, why it did get kind of tested out here, I'd like to see a significant bounce and then a retest of the low. And I'm talking about the one from March 6th out here where it came down on almost 70 million shares. We got 30 today. But this is probably going to be an area of support. What you really want to watch for is if this thing starts dipping under 10 and we start watching a lot of these big funds bail out of this. If it gets under 10 for any length of time, of course, a lot of funds will not be able to hold it. There's an issue with the value at risk model or how they calculate exactly what they can hold as an overall value of money in their account, and that's why they don't like to get $10, $5 stocks. The volatility goes up, means that they can't hold as much and put as much of a line out. The Staples down, heavy volume. Look for this thing race right down to that $11.04, probably here in the next day or two. When we come back, we'll look at TJ Maxx.
Darryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, I got to finish up the show here. Andy's warming up in the bullpen. Maybe you'll have some comments about Burger King and having it your way. And I sent him an article about coal yesterday. Maybe he's read that. Maybe he'll have some comments about that during the show today. I'll be very interested. Anyway, we were talking about TJ Maxx, another one. These retailers, we've been talking about it with Tom O'Brien on his show and some other ones for since before Christmas. None of these have been doing exceptionally well, although you would not know it if you listen to CNBC. They've been cheerleaders on this for a long time, and all these, they've been working very hard to distribute the stock to the rubes, but none of these have been doing well. I think we had a small discussion right before Christmas about how many malls would be closed because of JCPenney's. JCPenney, of course, had one big bounce. They had a 42% short interest in the company, and it's not uncommon to see any kind of news of them not impendingly blowing up in a huge ball of fire as a belief that one day they can turn themselves around. But JCPenney, all these stocks have the same problem, and that is people are willing to spend money on iPhones. They're not spending so much money on fashion unless it's at the very high end. They're buying a pair of jeans, they're buying some T-shirts at Walmart, and they're exiting stage left to buy that very expensive iPad and some tickets to Coachella. But it is going to be tough. But we're looking at TJ Maxx. TJX is the symbol on this, headed back down to this $52 level where it had a big gap. You don't like the volume here today. That's telling you we're probably going to get in and fill all or most of this gap that happened back in August, August 20th of last year. It had 8.1 million shares when it gapped up, and that is, it is going to be, I tell you what, I just can't imagine this thing. It's broken through that February 5th low at 55.82 that had 7.6 million shares. We got 13 million shares already today. So let's say this thing goes out at 15, 16, 17 million shares, and the last level of support would be this gap down here with 8 million shares. So not a whole lot out here to say that this isn't going to go right back down to probably $51 over the next few days. And at that point, if you had the high volume low, it bounced a bit, maybe you could see a bottom in sight, at least in that $52 range. But a lot of people that had all been in this huge run-up since last fall, all in losing positions if they haven't sold already. And I'm probably seeing a lot of those people cleaned out of their cash today, but it will be problematic. One of the stocks I did want to look at is Apple. Of course, we talked about this last week. It is a stock that's fairly weak, but I don't know what you do. The biggest problem is you've got a big operator in this stock that can probably get the CEO to say or do anything on a particular day now. The tail is now wagging the dog. And we're probably going to look for a lot of distribution, kind of like we saw on Netflix and some of these other stocks before Carl Icahn gets out. But he doubled up on this. He's got a lot of control in that company. And maybe one of these weak companies, but I have a feeling that old Carl can probably wet his beak a few more times on this before we see some weakness. Unless the market falls apart, going to be very tough to come back in and beat this stock up a little bit. Anyway, hang on, Brandy. And as always, sell when you can, not when you have to. See you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.